Hey, future homeowners! Whether you're a first-time buyer or just need a refresher, today we're going to break down the essential real estate terms every homebuyer should know. By the end of this video, you'll be equipped with the knowledge to navigate the real estate world with confidence. The home buying process can be overwhelming, especially with all the jargon thrown around. From mortgages to closing costs, these are the terms you'll want to understand before making one of the biggest investments of your life. Let's start with mortgage. A mortgage is a loan you take out to buy a house. You pay it back over a set period of time, usually 15 to 30 years with interest. The mortgage is essentially a lien on the property, meaning the lender holds the house as collateral until you pay it off. There are two main types, fixed rate and adjustable rate mortgages. Fixed rate means your interest rate stays the same throughout the loan, while adjustable rate may change over time. It's important to shop around for the best mortgage terms because even a small difference in interest rates can save you thousands over the life of your loan. Next up, down payment. This is the money you pay up front when purchasing a home, usually between 3% and 20% of the home's price. A larger down payment can lower your monthly mortgage payments and help you avoid something called private mortgage insurance, or PMI. We'll talk more about that next. PMI, or private mortgage insurance, is something you might have to pay if your down payment is less than 20%. It protects the lender in case you default on your loan. While it doesn't directly benefit you, once you build enough equity, usually around 20%, you can request to remove PMI from your payments. Ever heard of pre-approval and pre-qualification? These are terms you'll come across early in the home buying process. Pre-qualification is an estimate of how much you might be able to borrow based on basic financial information. It's not a guarantee, but can help you get an idea of your budget. Pre-approval, on the other hand, is more official. It requires submitting financial documents like your credit score, income, and debt to a lender. Getting pre-approved gives you a stronger negotiating position when making offers on homes, showing sellers you're serious. Now let's talk about closing costs. These are the fees you'll need to pay on top of the down payment when finalizing your home purchase. Closing costs typically range from 2% to 5% of the home's purchase price. Make sure to budget for this, as it's often a surprise expense for many buyers. Escrow is another key term. It refers to the holding of funds by a third party during the home buying process. The escrow company holds the buyer's deposit and ensures that the money is only released when all conditions of the sale are met. Escrow is a way to protect both the buyer and seller, ensuring everyone holds up their end of the deal. Appraisal is another important term to understand. An appraisal is an evaluation of the home's value by a licensed professional, usually required by your lender. The appraiser will look at factors like the home's condition, location, and market trends to determine its fair market value. This ensures you're not overpaying for the property. If the appraisal comes in lower than your offer, you might need to renegotiate or come up with more cash to make up the difference. Contingencies are conditions that must be met for the sale to go through. Common contingencies include a satisfactory home inspection, the buyer's ability to secure financing, or the home appraising for the agreed price. These are important protections for buyers, allowing you to back out or renegotiate if something unexpected comes up. Earnest money is a deposit you make to show you're serious about buying the home. It's usually around 1% to 3% of the purchase price and is held in an escrow account. If the sale goes through, the earnest money is applied to your down payment or closing costs. If not, and the contingencies aren't met, you may be able to get it back. A home inspection is an assessment of the home's condition, usually required before closing. The inspector looks for issues like foundation problems, plumbing, electrical issues, and more. The results of the inspection can give you leverage to negotiate repairs or price adjustments, so don't skip this step. So, there you have it. We've covered mortgages, down payments, PMI, pre-approval, closing costs, escrow, appraisals, contingencies, earnest money, and home inspections. Understanding these key real estate terms will help you feel more confident throughout the home buying process. If you found this video helpful, don't forget to like, share, and subscribe. And if you have any questions about real estate, leave them in the comments below. Thanks for watching and happy house hunting.